ladies and gentlemen. Let me first say that it's a great pleasure to be here with you for this, the 22nd AGM of the Asia Pacific CSD group. I must say this is something I initially laid bare, that I've always feel a bit of a charlatan when I'm called upon to speak on technological advance, as I'm really the archetypal dinosaur who has great difficulty in coping with this transformation that we see all around us. But fortunately, the central bank has people who are far more knowledgeable than I am, and they've armed me with, I hope, some useful information to share with you. As I said, thank you very much for inviting me to be here. The theme of today's conference, that is FinTech, Shifting or Shaping the Future of CSDs, I think gives a clear indication that the Asia-Pacific region is at a juncture where it needs to respond to the FinTech phenomenon in a manner that maximizes the opportunities and mitigates the challenges. It is vital that there is a discussion of the various issues involved, and that this discussion takes place at an industry level involving both regulators as well as the service providers. This forum, therefore, is an important platform to conduct such constructive engagement. As you well know, and know much better than I do, FinTech involves financial technology innovations using internet-based solutions that recombine existing technological infrastructure level capabilities to provide new financial services or solutions. So that is what FinTech is. Now, among financial services, FinTech has made the most significant advances within the banking sector, especially in relation to payments. Numerous apps have been developed to reduce friction in online and mobile payments. Central banks and financial services industries around the world are trying to reap the benefits of this FinTech technology. The success of FinTech has been driven by the proliferation of internet use and increased access to computers and mobile phones. Consumer preferences for convenience and speed has changed dramatically, and there is a demand for the market to provide them with safe technological solutions that help consumers to engage in economic activities with minimum hassle. FinTech has transformed parts of the banking and payments value chain due to the low technological and cost barriers to entry at some points. This has enabled development of financial service solutions using very little capital, based on access capabilities such as APIs and platforms established by infrastructure providers and licensed actors. Wherever there is a profit potential in streamlining systems, there is an opportunity for FinTech innovation. Further, as financial services become increasingly digitized, FinTech innovations will become the necessary norm rather than disruptive distractions. And this is already happening, as you know. FinTech has been able to unbundle supply chains and provide solutions which have a significant cost and convenience advantage. However, the customers tend to be with the banks and other financial service providers. The challenge is to bring the two together. We're seeing great technological advance on the FinTech side. The customer base is with the banks and financial service providers. How do you bring the two together without disrupting financial system stability? In fact, as a regulator, the central bank is faced with the challenge of, on the one hand, promoting technological advance, and at the same time, doing so in such a way that it's not disruptive, and that financial system stability, which is one of the core objectives of the central bank, is not compromised. And this is actually more complex than it sounds, in the sense that, if you look for Sri Lanka, I'm sure a number of your countries have a similar structure in their financial services sector. Sri Lanka has a number of banks, a large branch network, lots of bricks and mortar. So how does one go from a model, a branch-based model? Branches are in obsolescence. They're not obsolete as yet, but it's possible to argue that a branch-based banking system is in obsolescence. So how does one move from where we are now to embrace the technology without there being disruption which destabilizes the financial system? So that's really the challenge for the regulator, to make sure they don't stand in the way of progress, but to also ensure that the progress does not lead to disruption that undermines the whole system. Fintech has increased the capabilities and innovation potential of the banking industry. We have new entrants bringing fresh knowledge that can be adapted to suit our industry's trajectory. We have seen a new energy infused into the banking industry, and banks themselves are venturing into innovating fintech solutions. This has increased the prospects of having more efficient and lower cost services for the benefit of the customers. Customers now have more options for payments. Currently in Sri Lanka, retail customers can pay using the QR code, mobile money, cards with NFC technology, app-based payments, card-based e-commerce payments. All this is possible as long as merchants have and accept these different technologies. These advances broaden the points of economic activity of consumers and make greater financial inclusion more achievable. Of course, there are also risks associated with fintechs. Many fintechs have come from outside the banking industry. Therefore, they do not always have domain knowledge. Their strength is in IT-enabled solutions. However, they also need to enhance their knowledge on regulatory requirements when they develop their applications. This is a gap that needs to be actively addressed. This gap in domain knowledge means that fintech may not know the importance of the core priorities of the industry. For instance, for the financial services sector, the core priority is financial system stability and safety of public funds. Under no circumstances can these be compromised. Therefore, the Central Bank of Sri Lanka has introduced regulations to ensure that all fintech regulations, regardless of who innovates, requires central bank review if it relates to the banking and payments industry. Cyber risk is another challenge that requires close attention. Fintech innovations are generally connected to the internet. That means that core banking systems and other connected infrastructures are exposed to added risk. In the mission to find novel solutions, sometimes customer data can be inadvertently exposed, putting the whole financial system at risk. Therefore, it is vital that the technological design of the fintech solution is carefully assessed. For this reason, the Central Bank of Sri Lanka not only reviews the business process, but also the technological design. Fintech innovations have to be subject to information system audit reports to ensure their safety. Another risk is data security. Data has become the new currency. Many digital solutions provide free services in the exchange of customer data. Customer data is very valuable, and in financial services they are often confidential. Many fintechs design apps based on the free-to-use model, where their business model is based on generating revenue from customer data. This model has inherent risks when applied to financial services. For this reason, Sri Lanka is working to strengthen its data protection laws. Similarly, we must ensure that fintechs and financial institutions respect customer data and do not misuse them. As regulators, we cannot rely only on customer consent due to the systemic risks involved. Many times, customers are unaware of the gravity of what they are agreeing to and expect regulators to protect them. Therefore, a maximum effort is needed on the part of all the regulators to raise the awareness of the risks involved in data sharing among customers and their networks. What is the CBSL's perspective on fintech? The Central Bank of Sri Lanka expects that if fintech is used well, and it has immense potential to improve the financial services offered to the public. The Central Bank has been proactively encouraging electronic payments over cash, as it allows an expansion of economic activity such as through e-commerce. We have thus allowed non-bank fintechs to enter services such as digital payment service provision, and we encourage collaboration with the banking industry. This allows us to regulate fintechs better and gives fintechs the backing of stable institutions. This also increases customer protection. The central bank itself has initiated several financial technology infrastructure level innovations that have increased end-user participation in digital transactions. The Common Electronic Funds Transfer System, launched in 2015, has enabled real-time online bank transfers between customers. JustPay, a real-time system to facilitate low-value retail payments from mobile phones directly using the customer's bank account, was launched in 2016 through Lanka Clear. Today, we have a range of technology-based retail payments from mobiles. Further, the Central Bank of Sri Lanka introduced a QR code that allows any small merchant, be it a street vendor or a taxi driver, to accept electronic payments just by having a printed QR code and a basic mobile phone. These innovations have been the result of industry-wide collaborations. Going forward, we must continue to foster this collaboration to bring together dispersed capabilities into concerted efforts towards advancing financial services. Central Bank of Sri Lanka has been fostering industry-wide collaboration. Digital payment innovation policies are spearheaded by the National Payments Council, which is a collaborative council comprising stakeholders from all relevant sectors. It has spearheaded developments in fintech and blockchain technologies. The National Payments Council appointed 2 committees on fintech and blockchain. The Fintech Committee has been responsible for developing the standardized national QR code and a national transit card for Sri Lanka. The Blockchain Committee is currently studying the feasibility of developing blockchain technology in the areas of shared KYC, trade finance, and insurance, among others. As fintechs matures, it is important to focus on regulation. I think Ranil Vijayasinghe made this point very powerfully and cogently. I think often there is a confusion that regulation somehow gets in the way of liberalization, that it's red tape and increased transaction costs. But I think particularly as modern technology advances, as Ranil pointed out, it's extremely important that the rules of the game are very clearly established. Because while there are tremendous benefits, there are also enhanced risks. The regulatory framework forms an integral part of the institutional infrastructure of an economy. Regulation provides stability, certainty, and promotes good practices that protect the public. The public are protected by ensuring the stability of the firms that serve them. As regulators, our priority is the economy as a whole and maintaining its stability and supporting economic growth. In this respect, digitization has given the regulators many opportunities. We have seen firsthand the benefits and efficiencies digitization have in terms of easing entry barriers to markets, correcting information asymmetries, and promoting inclusive growth policies. RegTech provides us with an opportunity to enhance the scope of firms regulated and undertaking efficient implementation of supervision and compliance rules. We are supportive of fintech innovations, but also cognizant of the regulatory challenges they pose. To address this, the Central Bank of Sri Lanka has initiated a regulatory sandbox so that we can provide fintechs with the necessary guidance when developing their products in a safe and secure environment. With regards to the payments and settlements landscape, the Central Bank of Sri Lanka is continuously aligning its infrastructure with international best practices as reflected in the standards set by the BIS and IOSCO. These are international standards for financial market infrastructures, such as for payment systems, central securities depositories, securities settlement systems, central counterparties, trade repositories, that the international community considers essential for strengthening and preserving financial stability. We are also in the process of developing data security standards to ensure that we are in line with global needs for data protection. How can the stock markets use fintechs for their benefit? The central depository system of the Colombo Stock Exchange participates in the Lanka Settle system, which is Sri Lanka's sole high-value payments and government securities settlement system. The Lanka Settle system constitutes the RTGS system and the Lanka Secure system, which facilitate fund and securities settlement respectively. Under the Lanka Secure system, currently there are 2 subsystems. namely the scriptless securities settlement system and the central depository system. The CBSL owns and operates the RTGS, the scriptless security and settlement system, and CDS. The relevant IT infrastructure was set up in 2003 for RTGS and 2004 for the scriptless securities settlement system. Government securities are now issued in scriptless form. The majority of the securities are traded over the counter in the secondary market with DVPI real-time gross basis settlement in collaboration with RTGS. The CDS records ownership transfers from these transactions. Further, an online primary auction system has been developed in-house by the central bank and is now in operation for the primary market. However, the secondary market is an OTC market where securities transaction ownership changes in the CDS are completely handled by primary dealers and licensed commercial banks. The current system has challenges in terms of transparency and price discovery. This has constrained market development. To overcome these drawbacks, the Central Bank of Sri Lanka plans to establish a state-of-the-art electronic trading platform and a central counterparty clearing and settlement system and a CDS to facilitate electronic trading and straight-through processing of transactions in the domestic financial market. This would enhance transparency, develop the financial market, and ensure financial system stability. The proposed system has multifaceted objectives which include deepening and widening the activities of the domestic financial market to facilitate efficient price discovery and enhance efficiency through properly managed settlement and counterparty risk and greater investor protection to secure financial system stability. In addition to this, the National Payments Council appointed a committee looking into possible ways of reducing usage of checks in Sri Lanka. One of the findings of the committee was that there is a high volume of checks issued as dividend payments from listed companies of the CSC, even for very small values. We encourage and request the CSC to consider the possibility of mandating the use of electronic payment methods currently available when making dividend payments. Similarly, there are new technologies that can be explored by securities exchanges. Worldwide, 3/4 of the financial market infrastructure operators surveyed by NASDAQ and Celent are working on adopting distributed ledger technology pilots or are already using blockchain technologies. The Australian Securities Exchange is the first major bourse to commit to replacing part of its settlement infrastructure with distributed ledger technology. However, it has recently delayed the launch by 6 months to spring 2021. These experiences provide us with the opportunity to learn and leapfrog. Digital transformation is two-pronged. First, the conversion from analog to digital. The second involves digitalized products and systems connecting to the semantic web that allows innumerable recombinations of program layers and modules through distributed networks. This has led to a blurring of national, industrial, and firm-level boundaries. Cross-industry digital connectivity has led to previously differentiated markets converging, resulting in complex business models. Thus, as regulators, central bankers are witnessing overlaps and merging of sectors and regulatory hierarchies. Whether an industry is shifting or shaping because of fintech largely depends on where the industry is. If it is not digitized, fintech will shift it. You will see that some jobs will replace along with trading patterns. If not, fintech can concurrently both shift and reshape the industry depending on where it envisions itself. The most important factor is for the sector and the region to have a clear view of what outcome it wants through fintech. Fintech must be used to solve issues and open new vistas, expand businesses, and generate benefits from the new types of interconnectivity it offers. So these are exciting times for stock exchanges, and I hope you will have a fruitful discussion over the next couple of days, and I wish you well and congratulate you on your 22nd AGM. Thank you.